there is a big bullish call on a big oil stock today. Yes, you heard us right. Chevron upgraded to buy at Bank of America, the firm citing attractive risk reward and the industry's realization that it's got to get smaller and kick cash back to shareholders as well. Want to get to Joe, but first, Pete, you own Chevron calls.
No, I actually own the stock.
You own the stock? There you go.
As I look at, yes, sir. Yeah, I own the stock. I have for a little while now. And at issue is the risk reward is one of the topics that the analyst is bringing up here in terms of that being favorable. They've made an acquisition. That's favorable as well. Problem is, and I'm saying this as a guy who owns the stock, is we all see the light in front of us. So what is the time frame for Chevron? How much longer does names like Chevron and some of the other big integrated names have before they're under a lot more pressure? I think the one positive has been the move towards natural gas, the move towards the Permian, all the different aspects of where they are going for alternative energy as well. So there are some positives out there. I love the cash flow still, but this is a very, very difficult hold. I'm going to hold for a little while longer, Sully, but I am not expecting a monster upside at this point in time.
You know, it's interesting, Joe, because California, where Chevron is based, effectively outlawed the sale of gas-powered cars after the year 2035. Chevron, last I'm told, sells gas at gas stations. But I think the idea that Pete was nibbling around is that the new idea in oil and gas is like big tobacco. The realization is you can't grow anymore, get smaller, cut your CapEx, and give that money back to shareholders. And you might actually have an investment thesis as even if you wind a company down over 20 or 30 years.
Yeah, I would agree with that. And that's where I think Mike Wirth and the management team for Chevron have done an excellent job. When I look at the large cap diversified energy name, Chevron is the name. And I've owned Chevron in the past. But Chevron is the one name that really stands out to me going forward as a name that you would own. Overall, though, for energy right now, Brian, you know this, it is an incredibly frustrating environment to be an investor in. We talk a lot about the decline in the NASDAQ since September 2nd, but let's not forget or highlight the fact that energy really has been the leading sector in the 4-week decline, down nearly 13%. So people are trying to pick up the laggards today. That's why the XLE is pricing at 3% higher. Energy faces a tumultuous year coming ahead in 2021, when in Q3 and Q4 you're going to have a lot of debt maturity that's going to have to be met with. And then, Brian, as you know, there is an election. And I do believe that when you look at the sectors in the equity market, energy probably has the most exposure to some form of restrictive regulatory environment if Joe Biden were to win.
And by the way, look at this. Devon and WPX reportedly they're going to merge. Devon has a huge amount of operations in New Mexico, which, if Biden wins and does what he says he's going to do, banning fracking on federal lands, nobody would get hit more than Devon, which is maybe why they're doing deals.